Yes, I'm an old fat cat, old sod from the city, from the UK, and I am hateful towards anyone that raises money in tech or is doing well in tech, especially if you have no experience running companies but you're raising lots of money.
Why do you say that, Cyrus?
Well, I like to read the Financial Times and wear my three-piece suit with a Windsor knot as I walk past the Bank of England every day on my way to my work in Threadneedle Street by the Bank of England. And
what's wrong with your voice? Sounds like you're...
Bleep that out. Still got relations in the city.
On to the first big topic, which is Bailey Gifford's James Anderson. So the guy that runs one of the largest investment funds in the UK talks about UK entrepreneurship or lack thereof, and then he also talks about the UK market. I'll let you talk about this because you're quite vocal on this topic and you have been in previous streams. But give us an overview of what this guy Anderson is saying and where the large problem lies.
FT published an article. Anderson gave criticism of the mindset in UK, Europe, but predominantly UK. And he said the FTSE 100 is really a 19th century and not even a 20th century index, pointing to a scarcity of innovative and fast-growing companies in Britain. Anderson has turned the Scottish mortgage into an unlikely star of tech investing over the past 2 decades, so his fund. And their 10 largest holdings, we'll see if we can throw this up on the screen. Tencent Holdings, 6.1% of total assets. A bunch of other companies, including Amazon, Tesla, Alibaba, Delivery Hero. But you look at his percentage of total assets and majority of tech. His criticism is really, he says, I find it depressing. It echoes sort of what I always said on the podcast. I don't want to sound like a broken record. And the UK suffers from the same illness that much of Europe does, which is a cultural and regulatory environment that severely punishes failure. Silicon Valley applauds failure. They fail all the time. I think it was Jason Calacanis on one podcast said, because pre-seed investing is a game of you're literally just betting on the person, the early team. And Jason Calacanis said when he believes in someone and he bets on them, they fail. And then the person might be like, Jason, look, I'm having money problems. I might need to go back, get a job in tech in Silicon Valley. Jason's like, no problem. You want to go be a Google engineer for 2 years, save up some money, and then have another crack at this entrepreneur thing? I've got you. So people go, for example, because they've got bills to pay, they go work for 2 years, they come back, Jason backs them again the second time, because based on a batting average, after 3, 4, 5 tries, you're pretty much going to get it right. If you're smart enough to be in Silicon Valley, you will eventually get it right at some point. Not everyone, but in most cases. Now, UK does not get this at all. It's the exact polar opposite. And what they need to understand is that often it may take several failures before they hit success. And I only just found this out today. I told you this, I was shocked. In the UK, if your company fails, its directors can be banned for 5 years from serving as directors in any other companies. In Germany, you can be imprisoned for losing investors' money.
Fuck it.
How does that foster risk taking? Venture capital functions on the basis of 1 success for every 9 failures, roughly. So how is that supposed to work here? There would be no directors left, and in Germany, the prisons would be full. If you want to nurture, you must embrace and protect failure. It's a necessity, really. Americans get it. What do you think is the core issue of Europe, UK, beyond the cultural aspect or beyond the fragmentation of the market?
I don't know if the fragmentation can be broken down more, which is basically the thing with the US is you can set up a company and have pretty much immediate access to 350 million people with no border, quote unquote, right? There's less regulatory red tape. There is more access through actually well-designed supply chain systems that exist in the US that enable you to ship cross-state. This system that's designed for entrepreneurship to an extent. There's obviously tax reform incoming, and there's all of this shouting about billionaire taxes, which is another thing. But tax reform may change some of that. But the point stands that the US fosters an environment that is logistically far easier to invest in. Now, the interesting thing about Europe is fragmentation is not necessarily by design. Fragmentation just exists. Why? Because there's like 60 languages in Europe. And some countries are smaller than some of the smallest states in the US. So you're immediately confronted with this situation where most of your selling capability as a business, let's say you're based in England, you're based in the UK, most of your selling capability is constrained to the UK. And then the businesses that you purchase through inorganic means, so let's say you do some M&A as a business as you're trying to grow, and you've maxed out the amount you think you can grow organically, the businesses you purchase are UK based because you don't understand the business that happens in other legislative areas in other countries that could hinder your business. And so you're immediately stuck. Now, a lot of companies are starting to break this mold, if you will, like Deliveroo, for example, expanding throughout Europe, or some companies that are actually taking the tech that they've built, licensing it elsewhere, maybe in Japan or in Southeast Asia somewhere, in Australia. And I think South America will start to become the next hub for that, but that's more US focused. You start to get a feel for what entrepreneurialism could look like in the UK and beyond in Europe. But I think that fragmentation is just it's a feature, it's not a bug of Europe, and that's unfortunate, but it also explains why the US has done so well by the same token. So I agree that this guy Anderson is right, but the problem is more structural than what he's, I think, suggesting the answer to the situation is. We'll see, to be honest. I mean, his biggest investment's in Tencent. What is that? A Chinese company, right? So Chinese company that takes a lot of our data. But the point I'm trying to raise is, like, this guy, he obviously knows that the UK isn't the future, and you'd be hard pressed to ignore him because the guy knows what he's talking about. Their fund, that Baillie Gifford fund, the Scottish Mortgage Trust, has basically outperformed the market, the UK market, that is, by like 10x. So, like, you've got to take what he says seriously.
We've got a lot of friends in the London tech scene. Most of them are always looking at US funding options because they know that it will just propel them to success. It gets tiring because we talk about this a lot, but it's interesting to hear one of the top fund managers in the UK to actually go out on public record and just criticize. It's refreshing to hear. And it's funny because a lot of the people in the FT and the readers and everyone agrees, but then they're contradictory because when someone like Stebbings raises 140 million,
yeah.
It's funny because FT doesn't even cover it doesn't even scratch the surface of what some of the activity that even goes on in Silicon Valley. If they did, there would be an outburst on FT. So there's no answer to it when you're contradicting yourselves.
But what you can do is you can then look at the US and then say, okay, what happens in the US that's different, or what is the output of some of the systems that have been designed in the US that enable this growth and enable entrepreneurship and growing businesses and whatever. The West's...
It's mindset.
It is mindset, but there also has to be some structural elements in there that enable that to happen. The excess regulation in Europe, for example, would be a drawback that the US doesn't have. But anyway, I think the reason I bring that up is because there's an article in Forbes. It's actually a really good article, and I don't really like Forbes that much, but this article is really good, where they talk about the boom in entrepreneurialism since COVID in the US specifically. And then they give some really cool facts. We'll pull these up, but they kind of give a snapshot of the unemployment rate in the US since 1920, and it like peaks at 25% in August 1933, which was obviously the Great Depression, and then it's basically always below that number until you get to April 2020, when you get to 15% unemployment, or 14.7% to be specific, which actually puts into perspective how crazy the Great Depression was. Two things emerge from that, right? The first is part of the reason that entrepreneurship has grown in the US since COVID is because a lot of people came out of jobs and then needed to figure out how to pay the bills, so they went to do their own things. But also it shows that 14.7% could have actually been significantly higher had there not already been entrepreneurship in that country. So it actually is a double whammy of the benefit of the entrepreneurial rate in the US, if you will. And then a really interesting stat, I'll pull up the map. It basically puts into perspective what the startup nation means. And what I mean by that is it literally shows on a color graded map, I'll pull it up, of the number of the percentage of new businesses that have emerged in Q1 2021, and it's nuts. Like it's really concentrated in the sort of southeast portion of the US, which includes Mississippi, which had 125% increase in the number of newly registered businesses, Alabama, Louisiana, Georgia. And it's really funny because these are some of the states that you'd actually get quite the structural element exists in these states that enables people to create businesses, be it low taxation rates, be it support, be it funding, whatever it might be, that is supporting these these guys get money.
If you were to break this down from first principles, as we say, and you look at what the US was built on, how it was built, 200-300 years ago, you read some Benjamin Franklin and, Adam Smith, The Wealth of Nations, and all of these things. This is sort of in the blood of Americans. It's ingrained in US culture and mindset. And every time I've been to the US in the past, I'm just mind blown at how refreshing it is and how positive the energy. It's literally infectious, without sounding too philosophical or soppy, because I love the US, but I talk about the UK too much, but how contrasting that is to the UK, where all the UK entrepreneurs I know who have gone to the US, they've all had success, and they always say, people used to criticize me or say, what the hell are you doing with your life with this entrepreneurship thing, or get a real job, and like when the pandemic hit, US had all of these schemes that I'm not too familiar with, but from surface I know, like the SBA loans they were giving out, and they were giving out a lot of support to entrepreneurs. Of course, yes, a lot of businesses have still failed, not to disregard those. It's in the culture, and I don't think culturally Europe, with its many centuries of the way that they operate, their mindset, I don't think it's changing anytime soon. So if you are in Europe, you are in UK, you have to learn to work around it. We've seen some amazing tech come out of Eastern Europe and Estonia and some of these other countries. But I think if there's going to be innovation and a change of mindset, it's going to come from Eastern Europe. Estonia, aside from Skype, they've had a lot of other innovation, and there's a lot of hot engineers coming out. A lot of the remote engineers that are hired in Silicon Valley are actually hired out of Ukraine, Estonia, and Eastern Europe. So
yeah, some of Latvia as well. I'm not surprised, but the thing that does make it surprising from the data that Forbes has released, it's brought data, I think, from Salesforce, PayPal, and the Big Four firm Deloitte, that says the dominating types of startups that have been registered in the US since COVID have been all digital focused. And what that means is that they've relied on tech from day one. 70% of new startups were either tech-based or relied on these online tools from the start. That's Salesforce data. And then PayPal data shows us that business payments grew 33% in 2020. That's a big jump. And then also you see that since COVID, stores have been selling, the international stores that have existed on Shopify have increased by 33% as well. So the tools exist for European countries and European entrepreneurs to grow. So I think this lends credence to your idea about it being a mindset, because actually a lot of these are digital, non-border based companies, and so the option is there. It's just maybe a mindset thing that people aren't taking the plunge.
And why do you think so? Shout out to Michael Jackson, our VC plug content. He made a post. I can't remember the statistics, but something like, throw it up on the screen, it'll correct me. Something like 2% of entrepreneurs are Indian in US, in Silicon Valley, but they account for 23% of the unicorns, like the founders. Is it something like that?
Yeah, he says Indian Americans are 1.3% of the US population, but are founders in 23% of US unicorns. That is fucking ridiculous. So,
and shout out to all the Chinese, the Indians, and the Iranians who have, of course, there's less Iranians, but if you're looking at a per capita, I think we're up in the top 3. You're looking at Chinese, Indians, Iranians, and fair credit to any immigrant. I'm not discrediting any other nation. But what does this tell you? Because we're aware of some of the bright minds in Iran and the tech scene there. A lot of them are fleeing. Sharif University of Technology in Iran, which is the MIT of Iran, you could say. There was a girl we were speaking to on Clubhouse on there. There was like an Iranian tech event a few months ago. And she said on stage to me, she said, out of 67 people that graduated from my class in engineering from Sharif, 65 of them left Iran, and they all head for the West. Similar things, maybe not as extreme in India, but still a lot of the bright minds leave India. Same with China, and same with a lot of these other nations. But Europeans, you don't see as many. You see Europeans and Brits in the US, but nowhere near as much as nowhere near as much. So
a lot of that is down to escaping something in that country, though, isn't it? Because your standard of living would be higher. We don't have that fire under our bums because, well, maybe we do because we're basically immigrants, but others don't because they don't see that. So they don't have that, that fire under their bum to leave because they're quite comfortable here. And that's just a reflection of a developed state. It's normal. Yeah. Every country will go through that.
UK culture is, let's go to the pub, let's watch the game. US culture is, they do that as well, but a lot more people are saying, let's go do something productive. So,
well, you say that, but Antonio Garcia Martinez has written something quite interesting about his firing from Apple. Do you want to give a bit of background on what this is and why that mentality of US startup land and developing technology companies might be going down the drain?
So earlier I said there's not many people that I want to bring on as guests on this show. People we wanted to interview we have. There's probably a few more we will bring on. One of these people, top of my list, if you are listening, and I will eventually get you on, Antonio Garcia Martinez. I can't get up because I'll disrupt this microphone, but I would get up and applaud him. First of all, if you have not read Chaos Monkeys, the book he's written around Silicon Valley, he's sort of an expose or sort of story of his life from a young quant at Goldman all the way to leaving and getting a job in Silicon Valley and then going through Y Combinator and then working at Facebook with Zuckerberg and Sheryl Sandberg. He's just had a crazy life and career, and he is a sensational storyteller. It's very rarely that, I have a ton of books, as you know. I pick things up, I skim through, I check different pages, I take some notes, but rarely does a book keep me so hooked. Sensational writer. Now, why do we discuss this guy? Because this book he wrote, Chaos Monkeys, he spent 3-4 years just sort of living the writer life or whatever. And then eventually, as Matt Taibbi says in his Substack, we'll link all of this, we won't go into too much detail, but Matt Taibbi criticizes the employees at Apple because 1,000 employees got together at Apple and they signed a petition. It's recently, based in April, Antonio got hired at Apple to head up product and engineering, I believe, product for the ads team. A month into his job, he gets fired. Now, this is a man who had packed up everything. I believe he had built a house from scratch in the state of Washington. He had a whole life there. He sold everything, left everything, came over back to the Bay Area to work for Apple. A month in, 1,000 soillennials got him fired because of a sentence or two from the book he had written 4 years prior. One part of his book, he says, most women in the Bay Area, so Silicon Valley, are soft and weak, cosseted and naive despite their claims of worldliness and generally full of shit. They have their self-regarding entitlement feminism and ceaselessly vaunt their independence. But the reality is, come the epidemic plague, as it has, or foreign invasion, they'd become precisely the sort of useless baggage you'd trade for a box of shotgun shells or a jerry can of diesel. Matt Taibbi says, out of context, you could read this as,
it comes across as brash. It comes across as badly worded, but he's not doing it in that sense. Explain what Matt Taibbi says. Correct.
So Matt Taibbi says, it could come across as a would-be macho man beating his chest about how modern entitlement feminism would be unmasked as a fraud in a Mad Max scenario. So, but what he's actually doing, and Matt Taibbi says, Antonio is obviously not much of a shotgun wielder himself and is actually explaining why he fell in love for a strong woman. As the next passage reveals, he calls the lady who he had a relationship with and a kid with, he doesn't name her, but he calls her British trader because she was a trader in a bulge bracket bank. He says, British trader, on the other hand, was the sort of woman who would end up a useful ally in that post-apocalypse, doing whatever work, be it carpentry, animal husbandry, or a shotgun blast to someone's back required doing. So it's not a passage about women working in tech, as Taibbi says. It's a throwaway line in a comedic recount of a romance about the woman that he loves. We could go into more detail, but essentially it's taken out of context. And here is let's get into a bit more detail. Here is what really has pissed me off and Matt Taibbi and a few other people. Apple, if you're going to hire someone for a role that senior as an executive, you're going to do your damn due diligence. They were fully aware of this book. They got multiple references of very seasoned people in Silicon Valley. They were completely aware of everything, and they still hired him. Now, Apple caved in to this, yet it's very funny that a large portion of their revenue comes from Beats and Beats by Apple, and they acquired, obviously, Beats from Dr. Dre, who sold Beats to Apple. If you listen, I'm a huge fan. Like, if you ask me my favorite genre of music, I have a few, but probably hip-hop up there, and Dr. Dre, I've listened to him since I was a kid. So there's no criticism of him. But Dr. Dre has lyrics far worse than what Antonio said in his book, yet Apple had no problem acquiring Beats by Dre. Similarly, Apple are known for, I'll call it slavery of the people they use in the northern region of China in the horrendous conditions. So these contradictory soillennials, these 1,000, 2,000 people who sign all these petitions, and recently even went as far as pressuring Tim Cook to take a stance on the Israel-Palestine situation. It's like, what the fuck is this? Like, are we here to build a business, or is this a circus? Antonio Garcia Martinez's firing was probably the peak insanity we've seen in this whole woke culture, cancel culture. They were fully aware of this. They're hypocrites. There is a big issue in these companies. And just to wrap up, before I want to get your thoughts, Brian Armstrong of Coinbase sort of came out a few months ago with an article that said, well, we're not one of these companies that caves in or gives in to bullshit from employees. We're here to do work on a meritocratic basis. If it's not for you, fuck off, in a polite way. And I think a few people left, 5% of the company left. They got a severance package and on their way. Toby Lutke of Shopify, we're not a family. We're like a sports team. You're here to do a job. If you don't do your job, you're cut from the team. And I implore this. But unfortunately, people like Frank Slootman recently getting criticized still. So there's a lot of work to be done. But Antonio Garcia Martinez, I think hopefully there's going to be a lawsuit where he gets paid 10 to $20 million from this, because when you take into consideration many factors that I won't go into. But yeah, what do you make of all this?
There's an article that he wrote, the Substack article called Bad Apples, or Bad Apple. And in it, there's two quotes in it that I just want to say that are really, really reflective of his thoughts on the issue, but also of a general intelligent and rational person's thoughts. He says, if people get paid over six figures at a $2 trillion company, if people getting paid six figures at a $2 trillion company refuse to come into work at their spectacular multi-billion-dollar headquarters where every luxury is provided, then those employees have lost all grasp on reality and have no right to petition anyone about anything. I love that. And then there's a second quote, which is, Silicon Valley once served as the last refuge of renegades and dropouts, wild-eyed prophets and daring pioneers, the sort of place that would take someone like Steve Jobs in. Nowadays, he and people like him wouldn't last a day inside the companies they created. That last paragraph just shows the juxtaposition between an individual who created that type of company, the individual who was, by all intents and purposes, by any metric, not a normal individual. He had problems, he had issues. And so, like, that type of individual would have been, in my opinion, if he were working for a company like Apple today, one, have been disgusted with what Apple's turned into in terms of that snowflake mentality, but two, he wouldn't last a minute. People would find something he did in 1980 and say that that's cause for him to leave, without understanding the context in which either that thing was said, or without realizing that this man has created the multi-£100,000, $100,000 job that you're working in today. And that's the key critical issue that exists. And I think, I'd urge everyone not only to read Chaos Monkeys, but to read this Bad Apple article. It's very short. He is such a good writer because he creates great parallels between things we see today and things we've seen historically, talking about the art world in particular. And I won't ruin it for you. You should read it.
If you're listening, sign up to the pull request. We'll link it in the show notes. His Substack. He's such a good writer that the Substack founders have specifically said to him to take his writing career more seriously, because he can earn six figures from it, as some people do on Substack. And he's probably going to get a second book deal from this. And he's probably going to, hopefully, from the lawsuit, get at least 8 figures from Apple, I hope. Yeah, and look, like we're me and you are bigging up US a few minutes ago so much, but with this woke culture that's taken over everywhere in large corporations, you start to question, is this going to really harm innovation? I think it already has. I think if Steve Jobs were here and this woke culture, wasn't as extreme as it is now, Apple would be far ahead. I'm a fan of Apple, but what have they done in the last decade, really? People say, they've done the AirPod, they've done the watch, they've the new laptop M1 chip and multiple other things, but even the iPhone, the foundation of it is still Jobs. A lot of the it's still Jobs, the foundation of a lot of the things they're doing. So it's concerning. It's going to harm innovation, but hey, let's see how it pans out.
I like that you ended with that, because there's an immediate contender that comes to mind, which is Microsoft. We're recording this on the 27th of June, and Microsoft came out on Wednesday So 3 or 4 days ago, essentially the unveiling of Windows 11. There's a really interesting reality that exists, which is that the typical service-led revenue stream that Microsoft would have gone down with Windows is changing. So the way the Microsoft Store operates is essentially being turned upside down, which is it will accept any type of app. Chrome, for example, can sell, but developers will be free to use any type of alternative payment system on the Microsoft Store, which is essentially what it does is it takes away the 15% cut that Microsoft would typically take for selling things through their system. And why this is really interesting is because Apple currently charge like a 30% cut for anything that you sell through iOS, and Google also do a similar thing. And it's really hotly contested. And the thing that Microsoft are now doing is saying, actually, you know what? This is Apple and Google's weakness. How do we monetize off the back of their weakness? And now this is starting to happen with all of the big tech companies figuring out what are each other's weaknesses and how can we monetize such that we can either take market share from them or make their products look worse in comparison to ours. And Satya Nadella, the guy who's essentially running Microsoft, the CEO, This guy is fantastic, by the way. He has grown Microsoft inordinate amounts, and I know that's quite an easy thing to say that someone could do in this market, but actually it's quite hard because Microsoft's becoming less and less relevant as players like Apple increase their market share. But
you compare him to Steve Ballmer, and Satya's really, you can't compare, really.
No, you can't. But his M&A activity has been phenomenal. That's the really interesting thing. Like, it's not just been organic growth. The guy's been switched on enough to realize that, we need to actually take market share through inorganic growth, and they have the money to do so. But anyway, point I'm trying to raise is Microsoft is now snipping at the heels of Apple. And when you've got a company like Microsoft, which is the giant that it is, the big tech space is hotting up again, in my opinion.
You go through Reddit and some forums and, the few nerds discussing this stuff. Some people are actually saying, in their view, that how convenient is it to start a quote-unquote war just as the Congress is bearing down on breaking up their monopolies. People are saying they're not buying it. Next, there'll be a PR campaign about this competition. You look at someone like Peter Thiel with his very well-known speech, and he covers this in his writing and books. He actually wrote this on the Wall Street Journal in 2014, competition is for losers. I'm more aligned with what you're saying on this one.
On the basis of talking about tech companies, and in order to finish on something that's relatively positive and not as downtrodden as some of the stuff we've spoken about, let's lift up the positivity and talk about something that might be a good investment opportunity. This is not investment advice. We are not telling you what to invest in.
Shall I give a 12-minute disclaimer before I give a 30-second pitch?
Please don't. Or do it the other way around, which is do what new crypto salesmen do, which is tell you this is the next big thing that will make you a billionaire. Invest in this. And then they tell you 30 seconds about the thing, and then that's it.
Okay, please note, this is not investment advice or legal advice or any form of advice.
We are idiots. Do not listen to us. Do not listen to us.
I don't know anything. This is just... Go invest in Nvidia. It's a great stock. Why? Well, multiple reasons. One, we've seen with the increased rise of gaming that we've seen over the pandemic, people will say, yeah, but that's just because of the pandemic. Post-pandemic, it's going to be like the boom we saw in the 1920s with everyone going out and about everywhere. But no, when you look at the stats, even prior to the pandemic, gaming has been on this trajectory that is not stopping anytime soon. So the gaming industry, number one. Number two, whether you like it or not, crypto mining. Number three, management team. Number four, machine learning and AI as well. Many other reasons. And you can discuss the kind of moats that they do have and whatnot. The other reason I discuss it is because Nvidia has been looking at acquiring ARM. As our good friend Michael Jackson summarized, the EU's regulatory agency told the companies that if they don't submit a lengthy approval request by the end of this month, then they should wait until September so that review wouldn't start during Europe's summer vacation months, classic Europe, because Nvidia's 40 billion takeover of ARM Holdings, ARM, faces some issues at the moment. It's on hold, and they're facing some pressure from regulators. If this falls through, competitor in the US would come along and acquire ARM instead. Now, this would naturally lead to, some believe, a drop in Nvidia's short-term share price, as the GOAT Buffett says, kind of make your profit in the buying, or as any wise investor says. And as a long-term hold, given the trajectory of where everything's going, gaming, crypto mining, machine learning, AI, many other things as well, I think Nvidia is something that I'm very excited on holding for the next 5 years. Now, 5 years from now, you will either replay this and laugh at me, or I'll be playing 50 Cent I Get Money as a theme song. What do you think of Nvidia?
I like Nvidia. The interesting thing about Nvidia is that essentially has its fingers in a lot of pies, but because the business itself or the products that they sell are not well understood, the general retail investor doesn't necessarily invest in them. It does really cool stuff, like basically Amazon Web Services is a customer for its data center chips. So like that immediately tells you if you bet on Nvidia, you're kind of betting on a long-term partnership it has with Amazon. It's also partnered with Amazon and VMware on a cloud platform, which is supposedly AI driven, which is the next big thing that comes out of the cloud space. So they're doing loads of stuff. They're also invested in I don't know if they're invested, but they're definitely partnered with NIO, which is an electric car company. And they're essentially, their technology, Nvidia's technology, will essentially act as the brain, the sort of technical system that helps run those electric vehicles. So all good things coming out of its multiple fingers in multiple pies. So it's well diversified as well. The only thing I would say is that there is currently a chip stock shortage, right? There's an issue going on with the amount of supply of semiconductors in the industry. Nvidia is essentially a fabless chip leader. It will be hit by this reduction in supply for the current period. Now, what that does is it may decrease the price of the stock as it undergoes the market undergoes a reaction to this chip shortage. But on the flip side, what it can do, if general macroeconomics, is that it might a reduction in supply and a maintenance or an increase in demand will actually increase the price. So not investment advice, but I think it's a great company to watch. And it fundamentally, it's outperformed pretty much every stock on the US markets, basically, over the last, 20, 30 years. So
do your own DD, but yes.
Do your own DD. So yeah, I think it's a great buy.
I think we should start doing that end of each show. Well, actually, no, because if you are a good investor, your basket will only be 3 to 12 stocks at most. So after 12 episodes, we've run out of stocks to mention. So yeah, that's not a good decision, because we like to hold things for almost lifetime. We are not day traders, but I will sell you a course for $1,997.
Yeah. And if you buy today, we'll give it to you for $997.
And we'll throw in an extra one for your dog or your friend.
Everyone's going to be eating at that point.
Right. On that note, rationalvc.com. Go and read. Well, I'm not sure it'll be up yet, maybe in a few weeks, but you can read our other articles. But Iman, if you subscribe to our articles, you'll get it in your inbox. Iman today published a sensational article on zero-based principles. It'll be up on the website in a few weeks, maybe. We'll think about it. We don't publish everything on the site. That goes out to readers in the newsletter. But there are some free ones on the site you can read if you want, or if you want to subscribe also for free, then you get everything to your inbox. It's a once-a-month essay, no spam, no bullshit, very deep, original research. So yeah, go subscribe to that. Over 1,000 readers. Let us know your thoughts in the YouTube comments about these streams. We've had good feedback before. People prefer it to guests from hearsay, from rumors and what I ask people. But I want to see in the comments what the actual viewers think. Do you want to see more of these streams, or do you want to see us bringing on some big names from Silicon Valley? Because everyone does interviews, but I'll leave that to you guys. Anyway, anything else you want to add?
That's it. Enjoy. Peace.
Peace.